Castrol India, Rashmi Joshi, the CFO, joins in. Rashmi, hi, morning. What have been the drivers of volume growth this quarter for you?
Sure. So first of all, thank you for having us on the show. So you asked me about the volume growth, and I would just like to step back a bit and talk about the progress we have made against strategic milestones. So the volume growth that you're seeing in this year is a result of our continuous investment in our specific brand strength by spending on advertising appropriately, also spending on retail transformation in the market, making investments in launching new and improved products. So during last 12 months we launched quite a lot of new products or improved products, and that contributed significantly to the volume growth. Close to 80% of our volume growth has come from new products. So technology investment has also helped there. We have invested in distribution expansion over a period of time, and last time we had said we reached almost 150,000 outlets in terms of coverage. So that has also helped us garner volume growth.
Right. How have your margins been this quarter, especially because crude prices are now coming off?
So our margins have been better than previous quarter in this quarter because crude softened a bit, and we also got some one-time benefit because of the annual benefit we get because of buying. But what we expect is, so we'll expect to hold these kind of margins, which are average annual margins. It's about 93-94 rupees. So in the 90s range, we'll attempt to hold our margins. And because we are upgrading our portfolio all the time, we are bringing in new products which are with better technology or which are more relevant to consumers, and the mix is improving. As a result, we will try to hold our unit profitability. At the same time, we'll continue to focus on volume growth also. So if the economy does well and the GDP growth has been good, IIP was a bit low in November, but previously that was also good. So if everything works well in the economy, we believe we have everything in our portfolio to make the business grow really well going forward.
Right. What about the new plan that you're setting up despite overall auto sector weakness? What's the strategy there?
So our plant in Silvassa is already there, so it's not a new plant. However, considering the kind of products, and I explained to you how we're focusing on personal mobility, and that means a different profile of product. So the product portfolio is moving towards more smaller packs, which are relevant for cars and bikes. And we have continually invested in upgrading our plants, but looking at the possibility of growth in next 5 years, we believe that we will need to augment our blending and filling capacities in Silvassa by almost 50%. So currently Silvassa manufactures about 80 million liters. So in next 5 years we will look to increase it by another 40 million liters. So the investment will happen in a phased manner in next 2 years, and we believe that the personal mobility growth will require that kind of investments for us.
How much will you be spending on capex of new plan, and how will you be funding it?
So we are talking about 140 crores. So we have internal accruals, and if you would have seen our balance sheet, a very strong cash situation. So we will fund it from internal accruals.
We leave it at that. Thanks very much for joining us with those details. We really appreciate the time you took to speak with us this morning.